How to build an excellent business credit score in 90 days. Business credit versus consumer credit scoring. Business credit scores are based on a business's risk of going 90 days late on an account within the next 12 months, versus a consumer score, which gauges a consumer's risk of going 90 days late on an account within the next 24 months. Business credit scores are based on business risk. They're based on a business's likelihood of defaulting on an obligation, not the business owner's. Scores are based on how the business obligations are being paid. There are three major business credit reporting agencies. They are Dun & Bradstreet, Experian, and Equifax. Dun & Bradstreet is the biggest and major business credit reporting agency. Created in 1841, holds over 206 million business records. The Data Universal Numbering System, or DUNS, is a business worldwide identifier code provided by Dun & Bradstreet, created in 1963. Obtaining a DUNS number is the first step towards getting a business credit score with D&B. It takes about 30 days to obtain your DUNS number. You must have a DUNS number to work at places like the U.S. and Australian governments, even the UN. This is why D&B has to give you access to your DUNS number for free. The DUNS number is a 9-digit number issued by Dun & Bradstreet and assigned to each business location in the D&B database. As an example, a sample number might be 76-982-0861. The Paydex score from Dun & Bradstreet is the main credit score used in the business world. From D&B, the definition of the Paydex score is: the D&B Paydex score is D&B's unique dollar-weighted numerical indicator of how a firm paid its bills over the past year, based on trade experiences reported to D&B by various vendors. The Paydex score ranges from 0 to 100. A score of 80 or higher is considered good, or credit reflecting on-time payments. Personalized credit scores take time to build, as they are based on 5 factors. Payment history, which amounts for 35% of the score. Utilization, which accounts for 30% of the score. Length of credit history, which accounts for 15% of the score. Accumulation of new credit, which accounts for 10% of the score. And credit mix, which accounts for 10% of the score. Business credit scores are based only on whether the business pays its bills on time. For example, a 100 score means to expect payment may come early. Payments come with an early discount period is reflected by a score of 90. Payment is prompt reflects a score of 80. Payment comes 14 days beyond terms is a score of 70. Payment comes 21 days beyond terms is a score of 60. Payment comes 30 days beyond terms is a score of 50. Payment comes 60 days beyond terms is a score of 40. Payment comes 90 days beyond terms is a score of 30. Payment comes 120 days beyond terms is a score of 20. Unavailable is reflected on reports as UN. There are 4 main Paydex risk categories from D&B. A Paydex range of 80 to 100 means there is a low risk of late payment. A Paydex range of 50 to 79 means there is a moderate risk of late payment. A Paydex range of 0 to 49 means there is a high risk of late payment. D&B will notify a business when they are moving in between these levels. What D&B referred to as payment experiences are gathered from suppliers and vendors. Each experience reflects a different supplier and how bills are met with in relation to the granted terms. Up to 875 payment experiences are used to generate the Paydex, and up to 80 representative payment experiences are reported on the credit report. A business will need a Paydex score of 80 to obtain the most favorable financing. A business needs at least 4 trade accounts reporting to their file. Can take as long as 90 days for a score to be established. Paydex scores are based on timely payments, so it's essential that you pay your bills on time to have a good score. It can take as long as 3 reporting cycles for a score to be established. There is also a Paydex weighted average score. This score gives more weight to the trade accounts that report higher amounts of credit extended and less weight to trade accounts that are reporting lower dollar amounts of credit. On a D&B Business Credit Report, there are several items you will find listed. These include the full payment record, upper credit limits, how much is owed on each account, how much is past due, account terms, and when the account was last updated. D&B reports also list current assets and liabilities, working capital and net worth, total sales and new profit and loss, payment details for each account, detailed commentary. D&B offers another business credit score known as the Supplier Evaluation Risk Rating, or SER. This score predicts the likelihood that a company will file for bankruptcy and cease operations within the next 12 months. This score ranges from 1 to 9, with 1 being the lowest risk. The Superstability Indicator, or SSI, reflects the likelihood that a supplier will encounter a large and significant financial or operational stress over the next 90 days. This score ranges from 0 to 10, with 0 being the lowest risk. Experian is another of the main business credit reporting agencies. They stemmed from TRW, which was founded in 1901. They provide business credit evaluations for over 27 million small businesses and corporations worldwide. Experian's most recent score system is known as IntelliScore Plus, which they boast of as the next level in credit scoring. This method was released in 2008. IntelliScore Plus takes into account hundreds of variables to offer a business score between 0 and 100, with 100 being the highest. IntelliScore Plus is advertised as a highly predictive score that provides a very detailed and accurate reflection of a business's risk. IntelliScore actually predicts a business's risk of going seriously delinquent, or over 91 days late, or having a major financial issue such as bankruptcy within the next 12 months. Experian's score that ranges from 0 to 100 is a percentile score that reflects the percentage of businesses that score higher or lower than the specific business being looked at. For example, if the business has a score of 20, this means that company scores better than 19% of other businesses. That also means that 80% of other businesses score higher than that business. A 998 score on an Experian business report displays when there is a bankruptcy within the last 2 years. A 999 score displays when there is not enough information to score a report. IntelliScore is already being widely used. Many of the largest financial institutions worldwide use it, along with over half of the top 25 P&C insurers and most major telecommunications and utility firms. Industry leaders in transportation, manufacturing, and technology have also been known to use IntelliScore as their primary risk indicating model. The new IntelliScore Plus has over 800 aggregates or factors that affect the credit scores. Scores are assessed on the more than 7.2 million businesses in Experian's database. Experian first takes a business and looks at data segments such as firmographics, public records, collections, and trade information, then places each business in one of 3 different models. The first is their commercial model for small, medium, and larger businesses. Second is their blended owner model, where their commercial data is then linked with the owner's information. Thirdly, there is the IntelliScore Plus, or their percentile score. IntelliScore Plus, just like FICO, has multiple facets to the entire score makeup. The score is still based on the payment history of the business, but many other factors tie into percentages over the overall score. The score is still based on the payment history of the business, but many other factors tie into percentages of the overall score. The historical behavior or payment history accounts for 5 to 10% of the total score. Current payment status, trade balances, and percent of accounts delinquent account for 50 to 60% of the score makeup. The business credit utilization affects 10 to 15% of the total score. This has to do with the amount of credit that has been extended to the business in relation to the balances they currently have on those accounts. The company profile, age of business, industry risk, and size of business assessed by number of employees accounts for 5 to 10% of the total score. And 10 to 15% of the total score is determined based on the derogatory items, collections, liens, judgments, and bankruptcies that business has. Large companies often have high days beyond terms because they can set their own terms for payment rather than following industry norms. And in IntelliScore Plus, large companies are scored using special algorithms and criteria. A large business with Experian is defined as a business with more than 1,000 employees, and a business that has more than 50 trade lines. The result is a score that better reflects large business risk. When Experian is assigning a business a credit score, they take many factors into account. They refer to these factors as predictive data and use this data to better determine a business's lending risk. Multiple factors affect the score, including average balances on accounts, how recent are the delinquencies, what number and what percent of accounts are current versus delinquent, the percent of balances seriously delinquent, the overall utilization ratio, and any balances on leases. Equifax is the oldest and largest credit bureau in existence today. They were originally founded in 1898, 70 years before the creation of TransUnion. Equifax was gathering details about people, including their marital troubles, jobs, school history, childhood, sex life, political activates, and more. In response, when the U.S. Congress met in 1971, it enacted the Fair Credit Reporting Act. Equifax's main business credit scoring model is the credit risk score. This score was created to predict the probability of a business customer becoming seriously delinquent on supplier accounts or bankrupt within a 12-month period. Credit scores range from 1 to 100, with a lower score indicating a higher risk of serious delinquency. Equifax's credit risk score is their main business credit score. By definition, the score predicts the likelihood of a business incurring a 90-day severe delinquency or charge-off over the next 12 months. Scores of 90 and above express that obligations are being paid as agreed. Scores from 80 to 89 indicate payments are being made 1 to 30 days overdue. Scores of 60 to 79 represent payments being paid 31 to 60 days past the agreed-upon due date. Credit scores between 40 and 59 indicate payments being made 61 to 90 days overdue. Scores between 20 and 39 mean obligations are being paid 91 to 120 days overdue. Scores between 1 and 19 mean obligations are being paid 120 plus days past the due date. Equifax also provides a business credit score for suppliers known as the Small Business Credit Risk Score for Suppliers. This model is designed to help credit grantors improve their risk assessment and reduce delinquency rates while helping to improve profitability. The score utilizes unique bank loans, lease information, credit card data, and supplier, telco, and utility credit history, public records, and firmographic data from their own Equifax commercial database. The Small Business Credit Risk Score for Suppliers credit score ranges from 101 to 816. Check out this Equifax Small Business Credit Risk Score for Suppliers Performance Projection Table. Equifax also offers a Business Failure Risk Score with many reports. This risk score predicts the likelihood that the business will fail or file for bankruptcy within the next 12-month period. This model helps identify businesses that pose a greater risk for failure so that suppliers and credit grantors can take appropriate actions. Paydex, IntelliScore, and the Small Business Risk Score are the most popular business credit scores. A positive score can be obtained in as little as 60 to 90 days with all three reporting agencies. Paying business bills as agreed will net a positive credit score at all three reporting agencies. It's actually very easy to get very good business credit scores with all three main reporting agencies. To do this, first establish 5 vendor trade lines that report to the business credit reporting agencies. Ensure you use your credit and pay your bill as agreed. If you do this, you will be rewarded with an excellent score in 90 days or less. Contact us today to learn more about how you can establish an excellent business credit score with all three agencies within 90 days.